You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. Welcome to the endless party that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And if I sound a little bit different, I'm back from all of my gallivanting. I wasn't on last week, so I should sound a lot different than that. If we sound a little bit different in here, I do apologize. They were playing around with some settings while I was gone. I'm trying to nail them in, so hopefully it sounds good on the live stream and hopefully on the recording. It's not too much in the way of distortion. We'll get it all sorted out later in the week, I assure you, listeners. And of course, while I'm gone, all sorts of fun things are happening. You can find all of the great episodes archives. You can hear Uncle Mike and the Rock Lobster give me a hard time while I was gone in the archives. The easiest place to find that, of course, theoptionsinsider.com. Click on the option block on the right-hand side of the page, and your journey has begun. Or, of course, you can always hit us up via the mobile app available in all your favorite app stores, or just in your iTunes or your TuneIns or Stitchers. Just subscribe to Option Block if you just want this show, or for the full fire hose of mega content, grab the full network, the Options Insider Radio Network. Hit that subscribe button once, and you're done. You never have to do anything else again except sit back and listen to hopefully some interesting and compelling content heading your way. Of course, you can always join us live every Monday and Thursday, except when I'm traveling, like I will be later this week, so I'll have to figure out how to make what's going on with the live stream again later this week. But we're live right now via Mixlr, Mixlr, so you can join us there with your questions, your comments, your insights, your pearls of wisdom for us, as well as for the fellow options traders out there amongst you. All right, and joining me on the old program today, my cohorts, my partners in crime, the guys who hold down the fort when I am hither and yon. Now, let's start off in order of proximity. Let's start off with good old Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. And I hear you and the Rock Lobster giving me a hard time last week while I was oot in a boot, as the Canadians say.
We were just speaking the truth. That is all.
Well, there you go. You're known for a man who speaks the truth out there in St. Charles, the Wild West that is St. Charles these days. And joining us a little bit farther from home, we have a man who's probably happy to get one more blast of winter heading his way, this massive nor'easter that is rolling up on him. Good for him, bad for me and everyone else who's heading down to the southern part of the East Coast for the big FIA Boca conference going on later this week. It might be a bit of a ghost town now with New York and everywhere else pretty much shut down with snow, but he's smiling ear to ear. Listeners, if you could see him, you'd see that is the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Probably happy that his ice rink maybe gets one more go at life. Mr. Rock Lobster, welcome back to the program. How are things up there in the soon-to-be frozen once again wonderland of Maine?
Oh, it's cold already. I just, you know what, because I had a au naturel rink, all my water, most of my water melted away. So I get there's other people's rinks now, but mine next year I'm going full banana. So I'm loading it up with water and putting plastic and everything. But anyway, it is cold. And by the way, Tucson was much more fun last week. You get here and he's not even that much fun. It was super fun last week.
I've been told that. I suck all the air, all the oxygen out of the room. Actually, I wasn't told that last week. A lot of good listeners for Vol Views at the conference last week. It's always fun to have them come up to you and share their favorite episodes, perhaps least favorite moments, some weigh in on some of the weighty debates we've been having on that program. So I love to hear that. We'll have to do another live show for this program. I love to see the listeners of this show too. Maybe we'll have to get something set up later this year. Speaking of later, though, let's get rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, like the man said, this is the portion of the show where we break down what was rocking, rolling, moving, shaking, or perhaps the lack thereof in today's broad market activity. Most of the major indices finishing the day pretty much unched. By the way, I mentioned we are streaming this live and recording it on Monday, the 13th of March, and encroaching upon the Ides of March. We'll get to that in a little bit. Maybe the market's a little bit skittish ahead of those Ides. Of course, some things are actually popping off on those Ides. We'll get to that again in a little bit. Most of the major indices pretty much not doing a heck of a lot today. Most of the major indices closing roughly unched on the day. VIX cash taking a little bit of a breather off, about a third of a handle or so. Still shy of that 11.5 handle, right around 11.30 or so. A lot of people are playing that wait and see game ahead of Miss Yellen and crew. So there wasn't a heck of a lot. Don't forget, a heck of a lot. Not a heck of a lot, I should say. Really popping off in the broad market. Let's get to what's catching your eyes, if anything. Maybe we'll start with good old Uncle Mike, the aforementioned excitable Uncle Mike. What's catching your eye in today's activity, if anything, sir?
I hate to add to Andrew's cause, but I am not seeing a lot lighting up my tape. I'm looking for stuff, and I think today is pretty much a wait for the Fed Monday. I don't really see a lot going on. Snap, it's down about 4.5% on the day, so we got that moving, but aside from that, on the things with which I watch, I think, we got about 3 pennies worth of movement in Apple. You can usually count on Apple for something, even on a day like today, but you couldn't even count on Apple for such a thing. The S&P up a couple points. Nothing happened today.
Well, there you go. And this show is over. Thank you for that, Uncle Mike. All right. Let's go a little bit farther away where he was distracted by his ice rink, admittedly, but still keeping his eye on some activity. Mr. Rock Lobster, what was lighting it up in the old chatting of pits today?
Besides the consternation of nothing happening, I thought a couple things interesting. Intel actually spending money to buy Mobileye, I thought, was kind of interesting, spending $15 billion real dollars to buy that technology. So I thought that was interesting. As they try to branch out into being, that's a little bit more of an applied than making just chips, I thought. So I thought it was interesting for Intel. I like that as kind of the closet CD that pays a dividend stock. That I thought was interesting. Another thing, which will probably be in my blog tonight, would be you could actually, we were looking at ratio time spreads today, where you could buy gamma in the Qs for a 4-day hold for almost nothing. You can buy 100 gamma for $6 a day. That's how low the vol is. It's like they're giving gamma away. Okay, you want gamma in the Qs? Here, you can have it for nothing. Just as priced as cheap as I have ever seen anything priced. So, but we don't move. So the problem is, I think no matter how cheap something is right now, almost even if you're right with the delta, your direction, it's hard to make any dollars just trading short term until things things move. So, as far as things interesting today, and a lot of chip stops are up, and maybe commodities are moving, everything except for gold, but at least the commodity stocks. So there's a little bit happening on that score. But oh my word, it was a quiet day, except if you're Intel. I think that was about the gist.
My old stomping grounds of Intel. A lot of quiet days out there when I was out there, even though there were some crazy epic days out there as well. Those were fun times out in the go-go 90s and early 2000s, early aughts of Intel. Let's move on to another big name Uncle Mike alluded to earlier. The much ballyhooed, much talked about, much analyzed, much hand-wringing over Snap. Of course, they went IPO a few weeks back, and now we finally... All you guys have been writing in, I want options on Snap. Well, here you go. You got them. They went live on Friday. And looking at the action that was out there, it was a fairly active day. Maybe not the Rock'em Sock'em Robots day that a lot of people were hoping for, but a fairly active day, all things considered. Did about 112,000 contracts on that first session. Not surprisingly, puts outweighing calls, shall we say, pretty mightily, about 3-1. That gets back to what we were saying last week about how this float is all locked up. In any given IPO period, when the options are first available, usually there's a mad scramble for the puts because you can't really short the stock, and the float may not be very large or maybe locked up. In this case, in Snap, you have a bit of a confluence of all those events. You don't have a large float. The float is locked up for extended periods of time. You can't really short the thing. So guess what they're doing? They're buying puts, and they're buying them en masse, about 3-1, like I said. Puts over calls last week, about 112,000 said, to about 3-1 puts over calls out there. Today, actually not a bad day either. About a little more than half, I should say, of the volume out here. About 60,000 contracts lighting it up today. Maybe a hair less than that. And again, right about 2.5, 3-1 puts over calls. So it's still all puts all the time. We did ask you guys last week, by the way, what'd you think about straddles out there in Snapland? We asked you to price, I believe, a 1-week straddle. So going out listing when it opened on Friday, pretend to be a market maker in that opening rotation. How would you price that at the money straddle? Which at the beginning of the week we were thinking it was about 25. I think it ended up opening right around 23.5, where the stock was when those options were available. So that 23.5 straddle going out actually maybe a little cheaper than you might expect. It was about $1.75, as I recall, is where they opened it anyway. Most of you guys were leaning in our poll about a third, between $2 and $3, which was a pretty good range as it turns out, because the stock ended up moving about $1.40 that first day. So maybe that $1.75 or so where they priced that to begin with, maybe a little bit light actually over there from an overall weekly vol perspective. And right now, Snap about $21, so off about $2.50 from where it opened on Friday. So that straddle pricing at about $1.75 on Friday, perhaps a wee bit underdone. So maybe our audience had the right choice after all. Between $2 and $3 seems like certainly perhaps a little bit more palatable option. I know so many market makers out there, they're so scared to price any vol into any weeklies because they know it's just going to get rammed back down their throats. But in this case, maybe they were a little bit too reticent out here in Snap and perhaps paying the price. I don't know, Mr. Rock Lobster, anybody lighting it up in the pit chat in terms of interest in Snap? Have they traded? Are they one of the many people out there who are trading Snap puts right now, or are they kind of waiting and seeing over there in Pitland?
We have been waiting and seeing. I just haven't seen anything compelling yet. I thought the volatility kind of opened a little low to me in the 50s, but it's not lighting up. Although the put volatility's higher, and probably there is some money to be made selling some kind of ratio put style stuff or something like that. But it's garnering a little paper. It hasn't done enough. I mean, it's to be honest, it's one more stock with low volatility at this point. So pick your tech stock with low vol. I like to say there was something cool, but I mean, look at this. Okay, just for example, the March 20 and 20.5 puts are they're offered at like a 55 vol. I mean, there's not a lot. That's the 31 cycle. It's just not a lot. They're actually offered cheaper than the at the money vol. That's how they closed anyway. So just not very expensive volatility for a company called Snap. I thought things would be a bit snappier, but it's down another $1 today.
Yeah, I'm just looking at that right now. I'm looking at this week's 21 straddle with a little bit over $1, and that's about what it moved today. So I would. It's comparatively speaking, with the movements it's been making, looks a little low to me too.
Yeah, our audience, I think, was right on the money there with that $2 to $3. You could even lean a little higher. You're right. I looked at that. I was running around last week, traveling a lot. So I didn't have a lot of time to watch it intraday. But when it first came out, I too was a little surprised that they were given all the interest, the hubbub. Retail is going to be flocking into this one en masse. Going to have at least a couple of hot days in the beginning there. Give it a little bit more of a push. Maybe our listeners should be slinging a little bit more market making out there. They seem to be a little bit more on the money, at least for what we're seeing right now against Snap, hovering around about $21 and change. And I'd be remiss if I didn't mention before we got out of the trading block in this quiet part of the season that we are, again, approaching the aforementioned Ides of March. In addition to maybe avoiding sharp objects for the next few days, also, there are a few things actually to watch here in the old marketplace, which is kind of interesting. Of course, we've got the old Fed kicking off tomorrow and then running through Wednesday. We do have a follow-up. You guys like our question of the week. We'll get to those in the middle. We also have a bonus one this week about where the VIX will close after the FOMC on Wednesday. I know you guys love those, so head on over there at Options if you haven't done so yet and weigh in before that closes. That's kind of a short one, not a full week on that one, so hit that up before it goes away on the afternoon of Wednesday. But a lot of things kind of popping off this week, most likely, of course, most interesting being the Fed. So I don't know, do you guys put any stock? I think there was an article, where was it? Market Watch had a big write-up today about all the things popping off around the Ides of March and utilities, and trying to tie it all back into our old friend Mr. Caesar and his unfortunate fate on that day. Do you guys buy into anything, or you think it's all pretty much Ides of March? Forget that. It's just Ides of Yellen this week, and everyone's paying attention to that.
I would say Ides of Yellen, March in like a lion, out like a lamb. The lamb is coming, hopefully, with the weather.
Not so much this week. I like that though. Ides of Yellen. might have to be the title for the show this week. All right. With this quiet trading block, we got some questions to ask you guys in a little bit. Before we get to that, let's get right out into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time for the funky part of the show, the Odd Block portion of the show, where we dive deep into the wilds, the weeds, the hinterlands here in the old options universe and try to find some interesting trades, a little bit more challenging some days than others, today being one of those days. And we're going to kick things off in, I believe, this may be a newcomer. If not, it's one we certainly haven't talked about in a while. This is Encana Corp, ticker symbol ECA, closing today $10.64, up about 30 cents, or about 3% on the day. So a little bit of rally ho mode out here in good old ECA. This is the name that does about a little bit shy of 6,000 contracts a day, doing a tad more than that today, doing 81,000 out here in good old Encana. And what caught our eye was I think you can call this a fairly sizable chunk, a block, call it what you will, of options. We started off the day looking at, remember, this is the name I said that does shy of 6,000 contracts a day, doing 30,000 and change today in the APE puts. The APE 10 puts, let's see, for 30 cents, looks like paper blasting those out. That went up in one mega block over there on ARCA, through the bid, actually. So someone really had to work to squeeze to get these guys done. So drawing an aggressive line in the sand out here. As the day went on, that strike continued to be the strike du jour. Total of about almost another 20,000 piling into the tune of about 48,000 and change total on the day on that strike. Interesting stuff popping off out there. Again, looks like the open interest is only about 4,000 contracts. So clearly this is opening paper. Looking here back at the year that was out here in good old ECA. This thing has kind of been all over the place, down as low as about $5 and change, getting as high as flirting with just about 14 about a few weeks ago. So this thing has kind of been actually about a little over a month ago or so. So this thing has kind of had quite a range over the past year. Right now on the upper portion of that range, but well off those highs. So a lot of interesting stuff here to really parse. Of course, another thing popping off over here, Mr. Rock Lobster, that is, of course, there's a divvy popping off in good old ECA today, which may or may not have anything to do with this explosion of interest, explosion of volume. What's your take on this put and indeed options palooza out here in ECA?
I think when you look at that, didn't it look like a line in the sand put?
It's as if someone took a stick and just drew the proverbial line in the sand across the beach.
And just drew. I'm not going to say line of death because, Muammar Gaddafi is deceased. However, it does have all of the look and feel of somebody that just said, bam, I'm going to sell 48,000 by the end of the day. And the bid's still there, which is amazing. It was at 30 for a while. I think the original market was 35.40 when that huge print went up, and kaboom, 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 kaboom. It was a 35.45 market. And by the end of the day, you could sell all you wanted at 30 cents. Unbelievable. Yeah, they crushed the volatility down to that strike about 44%. So one more stock with really low vol. And, it's an energy, producer, explorer type. A lot of these around. Had a little rally today with a few more kind of dead cat bounce after oil. I just think somebody is happy to own the stock around $10 is what it looks like. So, the low of the year was $5. And, it sold off quite a bit from the highs. But, just it's a pretty big smack daddy of option sale, don't you think?
I like it. The Smack Daddy. A line in the sand for the Smack Daddy out here in good old ECA. We'll pay attention to that one again. There's always flurry of volumes around divvy times anyway. Less so than there used to be for a lot of behind-the-scenes reasons. We won't bore you with the minutia of OCC and clearing. They've taken steps to eliminate a lot, not all, but a lot of the old div trades we used to see going up over there. And these went up on ARCA too, not a place you typically see, nor would you see a lot of just straight up put selling. You usually see spreads and things like that. But still, it always does raise the eyebrows whenever you see these big numbers popping off on these days. Moving on to a name we haven't talked about here in the Odd Block in some time. Those makers of fine graphing calculators, as well as a number of other products. Yes, TI, Texas Instruments. Ticker symbol, fortunately not TI, they are TXN. Closing today, $81 and some change, up about 70 cents or nearly just about 1% on the day. This is the name that does about 8,000 contracts and change, doing nearly 32,000 today, about 3.5 to 1 calls over puts, and that should give you some inkling of where our attention was drawn, and it was indeed drawn to 2 months. It was spread across 2 months, if you will, almost as if there was spread action involved, which indeed there was. It was the March 80, so straight up March, no weeklies, and then the April 20, these are straight up Aprils as well, expiring on the 21st, so March, April, 80, 85 call spread going up. When we started the day, 5,000 by 5,262 times, to be precise. Looks like paper buying the March, selling the April, doing it for $1.04 and 24 cents. As the day went on, more volume piled in for a total on the March of about, if I could scroll that fast, that would be helpful. There we go. About 10,000 and change, almost 11,000 here on the Marches. That's on open interest of a little bit over 12,000 out there, and a total of a little over 10,000 over there on the 85s in April. So an interesting, this has all the hallmarks of perhaps taking some yield money off the table, maybe getting a little uncomfortable. The fact that we've blown through that strike now, hovering right around 81 out here. Again, a nice rally today in TXN. I want to say TI, but in TXN, really maybe perhaps the deciding factor for our friend. A little bit too far here at the 80 strike, but he's not giving up the ghost yet. He's coming back in, reestablishing, getting a whole 24 cents, getting a nice almost a quarter to reestablish out here on the 85 strike out here in April. And again, the open interest on the April's fairly slight, 600 contracts and change. So clearly that is opening. This is the name that had an interesting year as well, getting as low a year ago or so, right around 55 or so, and these days hovering right around those highs of the 81 level here. So flirting with new highs here, and our friend here deciding he's going to reestablish, and 85 is his new upper. We talked about putting lines in the sand before. Our friend here drawing an upside line in the sand here, this case to the tune of the 85 strike. Again, this went up in 2 blocks over there on the ARCA. Mr. Rock Lobster, take us off to the next one here. What's your take here on our friend maybe getting a little skittish on that 80 strike, but coming back to play on the 85s a month later for a whopping quarter or thereabouts?
I know. Do you find that it's now people, they're reaching for a quarter on an $81 name?
It's better than, what was it, 6 cents we saw before? And that was for like 3 months. That wasn't even for one. He rolled for 6 cents for 3 months, something redonkulous like that.
It is getting pretty darn thin out there. It's all I can say. Hugely thin for rolling this type of stuff. I mean, I was trying to figure out the pricing, if possible that this client sold the call. At the time, they paid about 30 cents over parity for that put. So, you look at it and you go, well, 30 cents over parity for the March put expiring this week. And, it's about a 20-cent put. So to me, it looks like they had to buy it. They had to pay up for it. Which I think to close that call, and then they rolled to sell another one. I mean, but it was parity. So most likely they enjoyed a pretty good ride in the stock. But just as the way it was priced, it looks like they paid decent dollars over parity. And then they sold that huge block of those 85s for, 24 cents. And what's funny is I wouldn't even want those 85s for 25 cents. Because what the heck's the stock going to do? I guess it can keep going straight up, but I mean, oh my gosh. Like I said, tough market for premium buying. I don't know. It kind of reminds me of, after the Gulf War, we were talking to some of my clients about when has it been sort of this sort of slow? And I was thinking, the last time I remember it being this like 2003, like kind of after the Gulf War, the guys went in. This is Gulf War II, not one. And because that was a little illiquid too, but this one, they won in 2 weeks, but you had like 3 weeks of just dead, or a month of just dead after that. And just the markets were just locked up. Nobody wanted to do anything. And it's actually, there's some liquidity now, but it feels like there's the same sort of going nowhere fast mentality. So, I mean, they're looking at that quarter, looking at 20 cents or 24 cents and saying, hey, this is going to be a whole lot better than nothing in a month.
Yeah, I guess that's one way to put it. It's better than nothing. 24 cents. Yeah, it's certainly better than some of the other rolls, some of the other hunts for yield we've seen over the past few months. Certainly not the end of this saga. I'm sure we'll have many more people coming in doing all sorts of dubious trades very, very shortly. All right, and speaking of dubious trades, let's wrap them up out here. And our old friend, haven't checked in with him in a while. This is good old Rio Tinto PLC. This is an ADR. Ticker symbol Rio, appropriately enough. RIO. Closing today, $40.85, up about $1.50 or nearly 4% on the day. It's the name that does about nearly 7,000 contracts a day, doing about 24,000 today. So a little over 3,000, 3 times I should say, 3x going up out here. And if you didn't get enough call rolls last time, listeners, we got a little bit more for you this time here. Like I said, in Rio, going up, it was the AAPL 45, May 19. May 19. May 42 halves. May 42 halves. Going up for, looks like paper selling the Aprils for 40 cents, 6,000 times. And then buying the 42 halves for $1.70, also 6,000 times. And that was pretty much the lion's share of the paper. Looks like a couple hundred more contracts flittered in afterwards. But the size paper was done in those initial 2 blocks that went up on the Philly, the Mays, lifting the offer over there, the April going up a little bit more nuanced, a little bit more mid-market. And open interest here on the Apes is nearly 10,000 contracts. So again, this has all the hallmarks of someone rolling a little bit of the other way. I had our friend before rolling out and up for yield. We have our friend here rolling out and down. And this time to get a little bit closer to the fire, get a little bit more, perhaps, action, a little bit more meat on the bone of those options. Like I said, the stock hovering today had a nice pop today, but still just a little bit north of the 40 handle. So those 45s, not perhaps looking that meaty, perhaps taking the opportunity to get what he could for those 45s. He got all of 40 cents for those, not a bad price, and then turning around to put it back to work on a strike that's a little bit more relevant perhaps and a little bit more time to play as well, the May 42 halves. And looking back at the year that's been here in good old Rio Tinto, it has been, like a lot of names last year, kind of all over the place with an upward sloping arc towards the latter half, the second half of the year. This thing was down in the mid to high 20s back about a year ago, and then Florida got as high as about 46 not that long ago, just about a month ago or so. And since then, it's kind of been on a little bit of a downward swing here again. Like I said, closing, well, it was shy of 40 till today when it gapped up another $1.50. So it's kind of been a little bit of rocking and rolling, little topsy-turvy markets over the past week or so. Our friend here, clearly, perhaps, if he had him on, wishing perhaps maybe he got rid of those 45s about a month ago, if he did have him on. And again, reestablishing here on the 42 halves, which, given the recent peaks around 46, perhaps not as outlandish as it may have seemed. If you're not familiar with Rio Tinto, they are a mining company, hence all the Sturm und Drang, the hither and yon we've seen out here in this name over the past year or so. Mr. Rocklobster, take us home. There's always action to be found in the mining or in the petroleum or energy sectors, and looks like Rio Tinto delivering again here, at least for our friend here, who's swapping out 6,000 of the Apes to Mays.
That's what it does look. But also too, when you look at this one, I feel like you're right. They want to get a little closer to the fire, and kind of ratchet up. My only question really, were they closing the April 45s, or were they buying them and trying to create kind of a little cheap buy right? Selling the short-term option, but then keeping, and that diagonal spread is kind of common with some fund managers. They'll buy the longer term in the money call and sell the shorter term, more out of the money call. This one doesn't look too bad, actually, the way it's priced. But it has all the hallmarks of wanting to get and stay long if they were bailing on their 45. So I'll check the open interest tomorrow, but I would guess that it would be the open interest on the April should be additive in there, just creating a little cheapy diagonal for an upside play.
A little cheapy diagonal. Nothing cheap, though, about your questions, so let's get to them. The mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, welcome to the mail block. Like the man said, this is the portion of the show where you get to weigh in with your questions, your comments, your insights, your pearls of wisdom, your hilarity, your slams on the Rock Lobster. All the above. We welcome them all at Options on Twitter and Stock Twits, the Options, or Options Insider, I should say, on Facebook. And, of course, the live chat via Mixlr, or just questions at theoptionsinsider.com, or hit us up via our mobile app. It all works there as well. Last week we asked you guys, hey, Snap's coming. Snap was lurking on the horizon. What did you think with the stock around $25? So where should they price that straddle? Most of you said between $2 and $3, which is a little bit better than where it ended up pricing. As the Rock Lobster said, another stock with cheap vol. And if you're a premium buyer, that might be attractive to you. If you're looking to harvest, like a lot of our friends here on the show, though, maybe not so much. You're rolling for multiple months, and you're happy to get a quarter, if that, these days. So you guys probably had a little bit better insight than some of our professional friends out here this week, even though I know a lot of them weighed in on that poll as well. This week we gave you a bit of a two for one in honor of all the craziness popping off this week. First off, we said, hey, looking at vol, you guys love to talk vol. We said, okay, VIX, we posted this right before the show time, so VIX was about 11.5. Snap 30-day vol was about a 56, as we mentioned earlier. A little higher now than it was, but still, it's fairly low. I think it opened around a 51 and gradually got forced up. Apple 30-day vol about a 14. And OIV, which is, of course, the crude VIX, 33, spiking a bit. It was trading in the mid to low 20s last week, so this thing has had a little bit of a pop as a result of the sell-off out there in crude. But still, we gave you 4 options, and we said, hey, if you had to buy volatility right now, what do you feel is the best value? So again, Snap, as we're calling it, the Tween vol, Apple, so the iPhone vol, VIX, aka VIX, and then OIV, which is the crude VIX. So same game as always. Uncle Mike, I think we'll start with you. If you had to buy some vol, which of these do you feel is, we didn't give you an option, no opt-out this time. No, I don't want to, I only sell premium. You have to buy. So pick your poison, sir, and then what do you think is winning our battle right now?
Oh, man, this is tough on a degenerate premium seller like myself. I think if I had to pick between those 4, I think I'd buy the VIX. I think that with it around the 11 handle as it is right now, I think that's just on the lower end. And I think that if we have some type of surprise on Wednesday, for example, I think that can go up. And, quite honestly, I don't care what side of the political aisle you're on, Donald Trump's been a major disappointment in terms of the low levels of the VIX. I would have guessed the VIX would have been much higher. Even if the market does go higher, he seemed like the type of guy that would bring the VIX on up. But he has not made the VIX great again if you're a VIX buyer yet. So I think right now I would be a VIX buyer.
And what do you think is winning our poll?
I think the audience is with me on this one. I feel that I feel the pulse of our audience on this one.
A double vote for VIX. By the way, this, I should clarify, this exists in this perfect world where you can just go out and buy a perfect product that replicates cash VIX. I'm not going to make you play with the futures. I can see people hitting us up already. What about the VIX futures, the term structures at the 15.5 and all? Don't worry about that. Just pretend you can buy cash VIX. Do you like that level? Yes or no? That said, Mr. Rock Lobster, what's your pick here?
I was going to claim umbrage, but I'm not, because you just said I can pretend. So
it's all about pretending. 140 characters, baby. You can't get in. You can't get into the nuance of the term structure in 140 characters.
I think if we're gonna play pretend trading, all right. Well, I'm with Tucson. It's the thing with the VIX. It's inevitable to go up. The problem is it could be a year, or it could be a week. It could be a day. So that's the one that really looks the cheapiest. Like we should see something, but I have to admit, there are some. There's some Dutch elections as well. We have some Dutch clients that are telling me, that they could see the right could move in there, but it doesn't look like they're gaining as much ground as they thought they might be. So, and then all this stuff should be bringing higher vol, but maybe it's not. So, but I think I like the make believe VIX, and I think. I think people, our listeners, will be make-believing with us. They will be make-believing with us.
Mr. Rogers VIX.
Mr. Rogers VIX.
Let's pretend we live in that magical world where several of the recent products that have been released over the last couple of years to allow you to replicate and trade actual cash VIX actually worked. Let's pretend we live in that world, in which case you can just trade those and have all your cash VIX. What a beautiful world it would be. Some people want world peace. Some people want an end to world hunger. We just want a tradable cash VIX. We'd be happy with that. All right. So yeah, you guys are on it. You guys are hitting it. See, our audience is buying what we're selling. Even if you two were hemming and hawing about the nuances there, and they're 45% saying VIX, aka VIX, is the winner so far for their poll. So that's where they're finding the best deals for vol. No, actually, second place, close to a tie. OIV getting some love, even though it's popped of late. I probably would have picked OIV maybe last week when it was in the low 20s, maybe in the mid 30s now, or low to mid 30s. I might have to take a second guess on that one. Snap number 3, 20%, and then only a meager 10% saying Apple. Mr. Rock Lobster. Apple's still one of the, at least what's had a bit of a move now, but going into earnings was a nice premium buy. But no love there. We got people writing in like Valman saying, I would guess Apple. Well, okay, Valman, that is your guess. It's a poll. You can just click the button for Apple, and then you can register your vote. Yeah, we appreciate you writing in, but you don't need to. You can just hit the button, and you too can. Usually write-ins are for things we forgot. Oh, you should have put in, 30-day silver ball or something like that, which we didn't. But so there you go. A vote for Valman for Apple. Maybe he'll change the tune here. All right, what else we got here? Here's a good one. It's a very brief. Brevity being the soul of wit here, our friend Anthony Carter embracing that, saying, Snap puts. What the heck? He is referring to, listeners, a phenomenon we kind of joked about last week on the show. Of course, the options hadn't listed yet, so we couldn't see it for ourselves, or anyone who's been down this road before knew it was coming, and that was, shall we say, a little bit of juice to ye old puts, and that is exactly what we're seeing out here in good old Snap land. Let's go a little bit farther out so we can actually see something. Here we go. So Snap hovering right around $21 right now. So these puts actually in April are not perhaps as obscene as I would have expected, given all the lockups and tie-ups and shorts. But still, maybe Mr. Rockhouse, I don't think you were on last week when we were discussing this. If you would be so kind, sir, as to inform our friend Mr. Carter what the heck is up with not just Snap puts, but really, anytime there's an IPO and options are listed for the first time, why there's usually a mad scramble for the puts. Usually it goes away pretty quickly. In case of Snap, it may be with us for a little bit. But why that phenomenon exists in the options, particularly when they're first listed, particularly right after an IPO?
Well, they're not floating a lot of stock, and a lot of these, when you have a stock with low float, it kind of pumps the price up. Shorts get interested and they want to sell it, but they can't borrow it because there's no float. So they go buy puts, and that puts more than average pressure, upside pressure on Snap puts, or in this case, Snap puts or puts in the underlying. So it's kind of a supply and demand thing, but it's a lot of it is mechanical. You can't short stock. It's not available. So they buy puts and they sell calls. What's amazing here is how low the Snap vol is in general. I thought there would be a little bit more than it is, to be honest. But maybe that's more reflective of people think the value of the IPO is still, in a fairly decent spot. But I'm looking at the April 20 put for 95 cents and thinking, that just didn't sound like a lot of money to me. So I actually might be doing a little put and Snap slafloozle in the name tomorrow. But I told
what was that technical term? A put snafoozle? That's your technical?
Snafoozle. I don't know. I just made up because I tried to say something that was snappy. Snafoozle. That was awful. But anyway.
That's pretty bad, sir.
I think I'm thinking though that 95 put in stock is not very much. Snap, their actual IPO price was $18 before they had that $7 pop. So you look at this and you go, why is that trading at such a premium? I mean, Twitter is still $11 billion. I keep thinking as a ARB somehow would work, but Twitter has just disappointed people now for a long time. So it seems pretty tired, but it's hard to believe that Twitter's $10 billion generating some revenue, and Snap, very similar type of platforms. That thing is worth $24 billion and it has a fraction of the revenue. So one is cheap and one's expensive, I guess, the way I look at it. But I guess Snap has not had as much time to disappoint everybody as Twitter has as far as the street goes.
Well, there's two rules to tech stocks. Rule number one, valuations never make sense initially. Rule number two, never forget rule number one. I think that Snap could have another run-up just because of the hype involved with this one. But I would agree from a fundamental standpoint, from everything that you're talking about, it really is kind of it shouldn't be at that price. But the only argument that I would have against that would be, well, it is. And so I believe that I could see Snap hitting another little run here based on something that really doesn't make a lot of sense. And so I don't think we have seen the last of Snap on the bull side of it, just because of the fact that it's tech. And remember rule number two, which tells you to remember rule number one.
Indeed, Kid Sinclair here saying, thanking us for letting them know that Snap options were up on Fridays. I didn't know they'd be available. Curious to see what kind of premiums they will have. Well, you may be surprised like us that they're perhaps not quite as rich as we thought. So if you're a premium buyer, maybe that will attract you. If you're looking to harvest premium, as I know many of you were on our poll a week or so ago, then perhaps not quite as exciting. All right, interesting little quasi-off-topic one here from Dr. X. He says, I just saw The Big Short. What do you guys think of it? Also, check out Logan if you haven't already. Great stuff. So he's got a little movie minute here on the mail block. Logan, I can co-sign on that one. I saw that last week when I was traveling. I had a few minutes in between conferences, and it was kind of fun. A little dark, a little dreary if you're into that one, but certainly one of the better X-Men films in quite some time. If you like your Wolverine dark and broody and or bloody, then that film's got you covered. The Big Short, I have seen this one. This was an interesting one. I'm not sure if you guys are familiar with this. This is, of course, the movie that was based on the Michael Lewis book. Michael Lewis, famous for of course, Liar's Poker, the one that everyone read before they got into the business, and of course later on some of his more, shall we say, histrionic books like this one, and of course, no, not Liar's Poker, that's the earlier one, Flash Boys. Blanking on the name there, Flash Boys, and some of the other ones he's written lately, really getting into these narrow niches of the space. In this case, The Big Short coming into credit default swaps, which is an interesting topic to make around a film, kind of a bit nuanced. These are not the type of derivatives we usually talk about on a show like this, listeners, which is things like Snap. They're all listed, exchange-traded derivatives. These are all OTC swaps, so much more basic, very binary type products. Yes, no, will they default, that sort of thing. And they're all done OTC, so you have a lot of counterparty risk. And that actually is a big part of the movie. These are hard things to dramatize, though. Dramatizing counterparty risk, Goldman's marking them against me, all these kind of things that, we're in the business, we kind of find it funny, but they had some challenges with this movie, and they took some interesting approaches to do that. They put the girl who played Harley Quinn in a hot tub to try to explain what a collateralized mortgage bond is. We have, I think, some other actresses, because they joke about how we're all celebrity obsessed in this society, so they have other actresses and actors explaining credit default swaps and how all the other stuff works, and it was a pretty interesting fourth wall breaking there. I guess that depends if that's your cup of tea. But I found it was an interesting take on trying to sex up an area of the market that, quite frankly, credit default obligations, as they call them, or we call them CDS, credit default swaps, not really the sexiest thing. I don't know, Uncle Mike or Mr. Rock Lobster, whoever wants to dive in first here. What do you think on our movie minute here?
Well, in terms of The Big Short, what I thought they did a good job of is exactly what you said, the counterparty risk. It shows the guy just cussing out the everything in his office when he's right on his trade with Goldman with his credit default swaps. And he's doing the right thing, but Goldman just says, oh, no, that's not how we value it.
Yeah, that was great. They were dramatizing the marks on his position. They're making that into like a dramatic moment of the movie, which I thought was just fantastic.
Yeah, and that's just, I think that in a lot of ways, I think that makes it show how good it is that we get the luxury of an exchange in our business. I think that's a great thing just after seeing that. The other thing that I thought they did a good job of explaining it to someone who really doesn't do a lot in the derivative world is when they said, okay, how do these default swaps work? And then they showed a guy with 19 at the blackjack table, and the guy says, I want to hit. And someone said, the odds of him getting 21 on this are such and such to 1. So if I'm going to take on this bet, I want this much odds. I'll give you those odds that the guy hits and he gets an ace or something like that. And he said, I want to hit again. And then someone said, well, the odds of him winning on this are this, and this to 1. And so the way that they did that, I thought was kind of intuitive for someone who has never really does anything in the derivative world. So those are two things that I really liked about the movie in terms of how they did it. So interesting take on, like you said, making something a little bit more sexy that typically when you go out to a party, at least before 2008 anyway, no one said, hey, what do you think about those credit default swaps?
Mr. Rock Lobster, anything on The Big Short?
I did. Well, I think another thing, which it was let's just call it I don't know if it's a misnomer of the financial crisis, but my problem with the financial crisis in general is the things that caused it are exactly what Mike just described there, where all of a sudden you have, Goldman was marking this guy's position. Now, as a floor trader, there are guys that mark stuff all the time, or not all the time because you probably get caught and busted for it. But securities had to close. I mean, it was a physical exchange, but the way they closed options over the counter, but you think about it, all of the CMOs, all the CDSs, all of the securities, there was a lot of demand. I don't know if any of you, even if you caught the CEO of Goldman when Lloyd Blankfein was talking about, he was confused because, well, that's what people wanted. I want a security that's going to pay me X yield if people don't default. So they created a lot of these securities. Now, clearly, there could definitely be a little, a kind of conflict. You have basically pretty big boy institutions lining up for this risk. The problem is, these are securities that probably should have been held to maturity, and then they would settle, right? But the problem is you had relatively illiquid securities where there was really no solid clearing or market mechanism. There was no third-party mechanism to sort of, like you said, like the OCC, to at least weigh in on the pricing of a security. Because what happened was all of a sudden there was no market for these securities anymore. So all the institutions, or a lot of the institutions, some Wall Street banks, right? This was a big problem. This is what all of the Fannie, Freddie, Citicorp, they used a AAA rated balance sheet. They bought a bunch of these securities to try to jack up earnings. And, the CEOs got nice pay packages because they were making lots of money on the carry trade. Carry meaning, they borrow money and they buy these securities, and they made the interest rate spread, except, they didn't think they were taking on massive risk to buy these securities. And then all of a sudden the securities get marked at prices they're not worth anything anymore. And some very well, probably went out worthless. But again, it depends what's backing the security. So if you have one of the bigger problems was just how things were marked. And it caused that, what I would say is a temporary and steep liquidity crisis, because all of a sudden securities, it's not like the whole U.S. housing market went to zero. There was still value there. And all of these securities were being marked and painted with a bad brush. And some of them were definitely junk, right? So there are houses that were probably worth maybe 50 or 60% of whatever the purchase value was, and depending on how the security was leveraged. So I think a big problem with the financial crisis, and I'm a huge proponent of, I just think there should be third-party clearing for any financial derivative transaction, similar to the OCC. That would clear, then that would force people to put up margin and have it confirmed by a third party. Because all of a sudden what happened is no banks, and this is a guy I know that had been on the street for a long time. He says nobody knew what was under everybody's skirt anymore. So they all stopped doing business with each other. And that's when the Fed stepped in and loaned everybody money, because it's not like the money wasn't there, just nobody was, money flowing is like the blood through the economy. And if it doesn't happen, you have a heart attack. So, those things really compounded to make the financial crisis. So I think they did a good job in describing that problem. The problem is they really didn't see how, that little marking incident the guy running that fund had with Goldman, that was just replicated, over and over and over, where there was just no market for these securities, so they're being marked at nothing. And I think that caused, at least at one part of the market, and then those problems snowballed into other things. But when you think about it, the bounce from the financial crisis started happening within a year. So, when they issued TARP, because the money, everybody's like kind of stuck their head out from the ground and like, okay, well, maybe things aren't totally falling apart. So it was, and I think that's a problem that all of the, Frank Dodd and all those, dumb regulations and everything, all those banks were regulated before. Like, they think more regulation is going to really change it. The only thing that changes it is if you don't have margin, you can't trade. That changes it. And that's what third-party clearing does, and the OCC has figured that out. I mean, is there a security that's more volatile than an option that goes from, a 16th of a cent to $50? I don't think so. So they figured out how to margin those products right and how to make people put margin up for them. So I think the same thing should be done. So anyway, that's my soapbox on that, but it was a good question.
Yeah, it was a good one. For all the listeners out there, like, what the heck's going on? You haven't seen the movie, maybe, and maybe you're used to, like, let's say Tesla puts. You buy your Tesla puts, but instead of being listed on an exchange, you got to call up Goldman or back in the movie days, Bear, and say, hey, I want to buy the 200 put in Tesla, and then Tesla tanks to 100, and you bought them for a quarter, and you call up Goldman and say, I want to sell them back to how much they're worth. They say they're still worth a quarter, and you're like, how is that possible? That's exactly what effectively those guys in this book and in the movie were experiencing, and an interesting thing to dramatize for film. All right, interesting question. Movie Minute. Maybe we'll have to add this going forward. But now it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, as you mentioned at the top of the show, it is the Ides. Beware the Ides of Yellen coming up in a couple of days. We do have the Fed coming. I think everyone's kind of keeping their powder dry ahead of starting tomorrow, but mostly into Wednesdays where the teeth of it's coming. Not so much really on the earnings front anymore here. Unless you're really excited about Del Taco. They came off today. So there you go. You got your Del Tacos. And that's really Oracle on Wednesday. That's really about Volkswagen on Tuesday. So there you go. A couple of interesting names popping off. But aside from that, it's all the Ides of Yellen. Mr. Uncle Mike, first off, are you foregoing knives? Are you forswearing knives for the rest of the week? And also, are you maybe forswearing the Fed for the rest of the week here?
Man, you're getting medieval on me. I don't know what you're saying here. But in terms of this week, I think the Fed is the big thing that's happening. There's no doubt about that. Going forward, I mean, I just think the only real question would be how much of a raise are they, not necessarily how much of a raise they're going to do this week. I think they're going to do a quarter point, but what is the guidance going to be going forward? Are they going to say, well, we think we're only going to do one more rate hike this year, two more rate hikes this year? I think there's going to be a lot of very close eyes watching and listening to what has to be said about this when the minutes come out or when there's an explanation for what they're thinking.
And Mr. Rock Lobster, what are you thinking? What are you watching for the rest of the week, sir?
Very similar. What are they going to say? I mean, was it not a year ago where, rate hikes and the market just went into a total tailspin? I seem to think I just remember a pretty good jump in vol in September was the last time I remember, besides the election, just a really good off-cycle jump in volatility or jump in VIX from that. So, rates normalizing, and the U.S. looks like they're going to try to be in front of it. But I don't think that's enough to really make stocks go higher. I think it's a positive, but it's just not enough to make stocks go higher. That's the bottom line.
All right, listeners, we'll have to leave it there. Unfortunately, another epic journey in the can here on the old option block. Went to a lot of interesting places today. Went to Snap, went to VIX, went to the Ides of Yellen, took some umbrage, answered your movie questions, talk about unusual activity, all sorts of fun stuff here on the old program. Of course, you want to check it out before the podcast, but you couldn't make the live for whatever reason. Hit us up, Mixler, That's where the live recording is posted if you want the nice, juicy, edited version coming out tomorrow morning at you on the old podcast. And before we go, Mr. Rock Lobster, what's cooking in the land of the pit, sir?
We have absolutely nothing cooking. However, no, we have our chat room every day. We're having a website rollout. That's our next thing. And also listen to us from our next masterclass, which everybody really liked, the last one. It was very good. So we are going to do a special on selling premium, essentially. And hopefully it's as well received as the last one we did. So I'm looking forward to it. So you'll hear from that soon, probably for, I'm going to say April-ish.
I just like saying the master's class, the master class. So if you want to join the master class, I have another joke I keep wanting to make, but it is woefully inappropriate. So I won't. Instead, I'll just send you over to optionpit.com. You too can join the master class at the Masters. Hit the talk in hushed whispers the whole time, though. It's very, very proper. Very masterpiece theater. All right. And what do you have in terms of mastery over there, Uncle Mike?
Well, aside from just now my newfound excitement for the Masters Golf Tournament coming up in Augusta in a few weeks, feel free to contact me. We are open for business at RCM. This week, let's talk about the RCM Commission Challenge. You've heard of the Pepsi Challenge from many years ago, but let's take the RCM Commission Challenge. Can I help you with your commissions? Feel free to call me. You will have a 5-minute phone call, and based on the fees and the commissions that RCM has through our 3 partner brokerage firms, we might be able to help you out. Feel free to give me a call at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com. 5 minutes could save you thousands of dollars.
There you go. 5 minutes, 15% more or less. We don't know. You don't know until you take the challenge. From Uncle Mike, take the commission challenge, mtosaw@rcmfs.com. Yes, he's open for business again. So all you people who were knocking on his door saying, please let us in, Uncle Mike, the drawbridge is down. You too may enter. And speaking of things that are popping off this week, you guys loved it last year, so we're bringing it back. Yes, our March Broker Madness is coming back in time for the big March Madness tournament. So you guys loved pitting your favorite brokers against each other to win all sorts of fun prizes, as well as just bragging rights. So we're going to do it again. The brackets will be coming out, I believe, tomorrow, alongside the tournament itself. So stay tuned for those and fight and vote and tweet and retweet and have all that sorts of fun. We love it. We know you guys too. So stay tuned for that starting soon this week. So stay tuned for that. And we'll, of course, I'm not sure if I'll be here on Thursday. We'll see. I will be traveling yet again, but well, hopefully maybe I'll be able to beam in. But either way, someone will see you here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.